Hello viewers, my name is George Hiotis, and what I'd like to do today is do a how-to video um, with respect to UFile 2019. Full disclosure, I work for UFile. I am in fact the quality assurance manager, and I enjoy my work so much. I love using UFile myself. Um, So what I'm going to do in terms of showing you how to use it is I'm going to do a model return for a family with one dependent child. Um, Both parents are in the gig economy, self-employed. Let's say they're in the 3D printing and manufacturing business. So what I'm going to do is go ahead and start a new file. If you have a pre-existing file, you can carry forward. Now, if you had version 2301 and you already carried your file prior to January 14th, there may be an error in the carry forwards. Now, if you haven't already carried forward your file since that date, before that date, and um, and you're using the latest version of UFile, you shouldn't have any issue whatsoever. So let's go ahead and start a file. The family lives in Ontario. Well, before starting the file, it's really good to go um, into important changes or tutorial to get more familiar with the program. Make sure you have the latest updates. And important changes, if we look at Ontario, uh, in Ontario alone, in our help, there's a wealth of information. So you have a couple of things that are new here, the Ontario Child Benefit, and you also have the Child Care Access and Relief from Expense Tax Credit, and the Low Income Individual Families Tax Credit. Hopefully we'll touch on those. All right, so let's go ahead and get started. So right off the bat, the first thing you need to do is identify yourself. And we can put here, this is all fictional, no relationship to any uh, living person. And the social insurance number that I'm going to use uh, is also completely fictitious. All right, and let's put in a date of birth and province of residence is Ontario. Marital status, we can put common law. Uh, you can customize this view and you can go in, zoom out. Help is just a step away. Support assistant, about you file. So here's the version I'm using, 2308, which is a good version of UFile. We're about to release auto fill your return and the eFile version. Um, Common law spouse, no change in marital status. This question is only mandatory for Quebec. All right, next. Now for the spouse, we recommend that you do a full and complete information return as opposed to just providing the net income. This way, by coupling your spouse to your return, you can share different credits more readily, and there will be a good optimization between yourself and your spouse. Okay, let's go to next. And current address, very important to put an address. If not, we're in trouble. All right, here we go. Um, Shout out to Ottawa here, Ontario, K1A 34M4. Okay, well, you can put in all this is fictitious, so you can even put an apartment number if you like. There you go. Uh, Not really necessary here to enter any of that. And again, a fictitious phone number. And next section is the CRA questions. All right. These are pretty important to answer. English for this tutorial. Are you filing an income tax return for the first time? No. Do you have any foreign property over with a cost over $100,000? And that includes, regrettably, um, U.S. shares held with a Canadian broker. And in this case, let's say we're poor. Do not sell your principal residence, and you're not a diplomat. This is a very important question for Schedule 6 and the Climate Action Incentive credit on Schedule 14. So no, we're not a diplomat, nor is any member of my family as such. Yes to Canadian citizenship, and let's say we want the convenience of registering for the elections right off the bat from our tax return. A supplement for the climate action incentive, since Ontario is not a signatory to the carbon tax. The federal government is giving people a refundable credit to offset the cost of the carbon tax. Um, let's say we're there. There we go. And all right, it's great to sign up for email notifications from the CRA. For the purposes of simplifying this tutorial, we're going to say no, as we did in the previous one. Otherwise, we will say yes, and you're required to enter a email address. Net file, yes, of course, if we're eligible. We're not going to be filing a prior year return. There you go. And we can go, this is if you want to autofill your return with data supplied by the CRA. That's a personal choice. Me personally, I like to collect my slips either electronically or on paper and do it myself. CRA expressed no. If you want to sign up for that, that's great. More importantly, I want to show you how to do the data entry. So let's say we have no other income, no special situation, except self-employment income and maybe some investment income. Um, Investment income is right here. It's already checked. And self-employment income is great. And some tuition. Well, let's not put tuition. Let's put donations. Okay, we'll maybe put tuition for the spouse. Okay, so right off the bat, I clicked on self-employment, and when I click on the next button over here, I should see the self-employment section pop up. Some interview slips are there by default, so RSP is omnipresent, and here's the self-employment income. Yep. All right, so let's go ahead and start a self-employment return. And we're in business, and select the business use of address. Select the business address to use. Enter the address or the same as the taxpayer. Well, let's say we have an office outside of our principal residence or dwelling. So let's put a fictitious address. Uh, Wellington sounds like a good name for a street. Ottawa, Ontario, K1A 3 and 3. There you go. Business name. Something to that effect. I can make it bigger so you can see what I'm doing. Suppose. Yeah, here we go. The beginning of the tax year for the business. You can have a year that straddles the calendar year, a tax year that straddles. Again, that's a bit complicated. Not too complicated, but a bit involved. Hey, what did I do there? There we go. So let's just give it a calendar year end. Now, finding the next is a bit challenging, but not something we can't overcome. And I'm not too sure if a 3D printing business we could readily find it. We could put manufacturing other, I suppose, if we can't readily find it, just so we won't waste too much time. Gee, distilleries, microbrewery. I bet there are some people out there that have a microbrewery. And keep on going. Hmm. Sorry for the delay. I'll just pause the video, and when I find it, I'll recommence. Hold on. Well, I found on all other general purpose machinery manufacturing. I'm not too sure if that fits the 3D printing category. I'll look it up, and maybe if I find anything, I'll put it down in the comments. Machine parts. Let's see. And that's 100%. Type of business ownership. Now, even if you share this business with your wife, it can be a sole proprietorship or co-ownership, not necessarily a partnership. A partnership is the type of partnership from the legal sense of the word. So let's say just sole proprietorship. Federal account number that you probably should have. And you probably should have a GST number if your gross sales were over $30,000. You need to collect GST. Information about internet business activities. Let's say you have one web page, and let's give it a name, a fictitious name, of course. And 75% of your income is from uh, the, the net. Um, I guess this is for information purposes only. That's the identification. We finished it. Let's go on to next. Income. So this is not the first year. It's not the final year. Uh, so gross sales. Let's say we've made $125,800. That's great. GST collected. Um, let's say you collected $7,500 worth of GST. Let's use the quick method. GST included in sales, let's say it was 17,900. Discounts and rebates, let's put 5,400. Cost of goods sold, opening inventory, let's start with 37,800. Purchases, you purchased another 15,600. Direct wage costs, you're pretty much self-employed, so you didn't have any wage workers. Closing inventory, let's say we finished at $27,800 in terms of inventory. And let's say you spent $3,500 in advertising, meals, 1,900. You're not a long haul driver. You bought $900 of hockey tickets to your suppliers and friends or business friends for promotion. But that's, let's say somebody owes you $610. Insurance, let's give that a hefty $6,700. Interest, did we say 925 yet? No, we didn't. Long-term interest, let's say 1,300. Business tax fees, 2,500. Office expenses, let's say 975. Supplies, 450. Legal fees, they're usually expensive, 2,900. Professional dues, well, where you're printing. You could be in part of the order of engineers. Now, forgive me, I don't know. I'm not an engineer, so I don't know how much the fee is, but I'll put that at $900. Accounting and professional fees. Let's say you have a little bookkeeper. From time to time, he does your books and gives you a balance sheet and income statement at the end of the year, and also manages the submission of your quarterly tax, your GST. Now, the remittances are not covered by the software, so you have to do that separately throughout the year. All right, so accounting. Let's say the accountant was nice to you, $1,900. All right, management and administration fees, none. Well, rent, that costs an arm and a leg these days, $27,800. Let's just put it to $31,000. Okay, maintenance and repairs. Well, a couple of things broke down on you. There you go. Salaries and wages. Yeah, you hired a student part-time for the summer. There you go. Property taxes. Well, that's always expensive. Travel. Yep. Telephone. Utilities. I would put that. I don't know. Uh, Hold on 1 second. Let's pause. Sorry about that. My son called me. Alright, fuel costs except motor vehicles. We don't have any of that. Freight and delivery. Well, let's say we did a lot of posting. Commissions paid. Uh, nah. Convention and training expenses. Let's say you went to some tech talks. Uh, Here you go. Round numbers all the time. There. Sorry for the interruption, folks. Alright. If less than 100% of an expense above applies to the business, enter the applicable percentage. I would just go ahead and just put the net amount of the business expense. This is applicable if for example, you're using a part of your home, I suppose um, for business, or a portion of the expenses of the total expenses was actually for personal. I would just go ahead and put the net amounts there. Okay. Um, Items to be added back to the business income. Any entries makes here. Okay, this would not be applicable if you have an ordinary business. This is usually for partnerships. Um, Other income solely attributable to you. Again, this is for partnerships, partnership expenses. All right, multi-jurisdiction if you are operating in more than one jurisdiction. We'll keep it simple. This is just Ontario. Motor vehicle expenses. Let's go to next. Oh, that was my computer stalling there. Let's say we have a purchased vehicle, and of course we're going to claim depreciation on it. Business expense, model of the vehicle. Uh, it's a Honda Civic. Uh, Purchase date 25th of August 2016. Description and adjusted cost base of the vehicle. Well, let's put we bought it for $27,000. CCA, let's say it's class 10, 30%. Opening balance 18,900. This is for accelerated depreciation for assets acquired given this date here, November 20th, 2018, after that date, and available to you for use before 2028. And this is something that the Liberal government introduced a few years back in order to make our uh, taxes more competitive with the Americans, further to the changes that the President of the United States made. Um, so when they apply changes to the depreciation classes, those changes are the same for corporate and personal. Okay, we did not dispose of anything. What's important to note is your total mileage versus the amount done for business. So here's my total, 20,000. If you inadvertently mix those two up, the ratio will be 1 or 100%. Okay, I'm just putting here fictitious numbers. Forgive me if they seem a little bit strange. After all, I am from Quebec. Interest expense, we don't need that. We don't need that. Well, maybe. Why not? Short-term rental fees, that is if your car broke down and you had to go for a car rental. Um, Parking fees, that's pretty cheap, but anyway. Um, so that should do it. Home office expense, we'll skip that. Balance sheet, we really don't need to do that. Labor cost is actually for Quebec. Adjustments for non-December um, year ends, I believe we identified it as a calendar year business. Let's double check. In the identification. Yes, okay. And let's go ahead and put some CCA classes. We'll put the notorious Class 8, which includes equipment and furniture. Notorious is not the word I'm looking for. Um, and let's say the opening balance is 25,000 allocated to the business. Portion of CCA used for business or employment. I don't think that's necessary. Date of purchase would be 14/09/2010. ACB would have been 30,000. I bought it more than the undepreciated capital cost. Do not limit anything. There's no disposition. There's no AAP. Um, let's go ahead and add another class. So you click on CCA, and you already have a class 10 vehicle. You could put building, equipment and furniture. That's great. We should put eligible capital property as well. Hmm. Um, let's put another class 10 for computer equipment. Okay. And let's say we bought a high-end computer, so high-end computer. Again, we're not going into too much detail, but we're trying to keep it simple. Let's put 15,800 here. Again, to the business level. Purchase date would have been in 2016. So Harold Falworth's tax return is almost done. I think this is all we need there. And another class that you should always have is eligible capital property, which is uh, it's Goodwill. So let's keep matters simple, and we won't have to do a reconciliation, but usually UFile does it for you. If you have Goodwill prior to 2017, the rules had changed. Prior to that, there were different rules to claiming Goodwill, and now it's more or less a class in itself under depreciation. Again, that was a change brought in by the Trudeau government. Okay, so Goodwill, or it can be a client list, intangibles, uh, and let's put that in at $55,800. Purchase date, let's say it was since the day that your business had begun. I know that the other assets have been acquired prior to this date, but you have a certain amount of time before they're ready for use. Um, I could have put a date in and around the same time as the other acquisitions, just to make things simple. Um, the ACB, let's say you actually did pay for this Goodwill, and the client list was at $60,000 at the time that you acquired the business. There you go, business level. Now we have three depreciation classes. That's great. Let's say we were healthy, but we had dental expenses just the same. And the dentist was kind to us, but not that kind. And we were also generous. Put in a fictitious name there. Gifted money. And we invested in our RSPs in the first 60 days. My deduction limit is $57,800, not me personally, but for this taxpayer. Do you have unused contributions? No, no, no. Alright, first 60 days. Issuer, TD Canada Trust. $5,000. Okay. Now, in terms of partners, let's say the spouse is a co-owner. Okay, so we add the spouse here, and we generate business income statement for the spouse, and we will say 50% co-owner. We did not put office in the home. There you go. Ontario credits, we'll do that last. Let's add the spouse. Alright, so it's MS, Danielle, Longworth, and her social insurance number, her date of birth, situation, province of residence. She's also in Ontario. Let's put yes, same address. Language, English. Are you, no, it's not my first tax return. I don't have 100,000 foreign property, did not sell my principal residence, and I'm no diplomat. Great. Yes to my citizenship. And climate action incentive, I believe we put the Ottawa Valley. I hope that matches. Anyway, no, for the purposes of simplifying matters. And actually, we didn't put any investment income for the gentleman. We'll put some investment income for her, and then we'll put some in for later. I don't have to redo that income statement, the business income statement for the spouse, because I identified her as a co-owner, and I asked UFile in Harold's file to generate a statement for me. However, I will put some investment income for her. And what I'm going to do is, again, this is a fictitious, it's actually a real one, but just using it for the sake of using it. And you can put joint there, but that doesn't matter. It actually does matter if it's joint or not, but for this example, it doesn't. Actual amount of eligible dividends, let's put in here $5,000. And we said we're going to put in some investment income for him, In his case, let's put in some interest. And he likes to bank at the Royal Bank. There we go. Royal. Alright, interest is box 13. He's also rich. Who are we kidding? Let's go to next. Already we have some information here. UFile will systematically choose the optimal person to claim the medical expenses. UFile will systematically choose the optimal person to claim the donations. Great. Alright. That's all fine and dandy. We did all the entries for the spouse, but she also had medical expenses. Again, dental. Alright. 2408 2019. Dentist. You can identify the dentist if you want. Her treatments were more expensive. And let's put in a donation as well. We have to click on donation. There. In the interview section, it'll pop up. And what do? We find the donations section, add a charitable donation. She donated to her parish about $600. And that was a gift and funds. There you go. So we have medical donation, and she also contributed money to her RSPs. Her RSP deduction limit is about 80,000. She hasn't been deducting anything in the past. So contributions made to your spouse's RSP. Nope. First 60 days again, Royal Bank. Yeah. 15,000. Let's go to next. And now let's add a dependent child. So, Harold Jr. Dash Longworth. Relationships is son, social insurance number, and date of birth. Oops, that didn't jive. Province of residence will be Ontario. Marital status single, and he had no income, and he did have childcare. Let's go to next. Here, notice the childcare expenses popped up only after I hit the next button because I've entered in the interview section certain criteria that identifies them as a minor child. Okay. So amount paid to the daycare, that was pretty expensive. Let's say 10,500. It's a private daycare, ABC daycare. And address of the daycare. That's pretty much it. What I like to do at this point is go to the family head, go to the review section, and I think in the messages section, it'll remind me. Let's see what that is. Yep, okay. Let's eliminate. It should remind me that I should do um, something with respect to the Ontario credits. See? So let's go to and click for ON Ben. And complete it. So did I have any political contributions for Ontario? No. Assigning Ontario credits to spouse? Not interested. Owen Ben application for the Trillium benefit, Ontario sales tax, and whatnot. Pretty easy. Do you want to apply for the Ontario? Let's say yes. You selected yes. Sure, you can consult the declaration box below. Continue with your data entry. Application for Ontario Northern Energy? No. Um, let's just put yes. Choice for delayed single OBT payment? Let's put no. Ontario, well, not a senior. No. Involuntary separation? That's not the case. Declaration and information about principal residence. You made at least one application in the OBN above. You now declare the amount in 2019 for rent, whether you are a student, designated residence. Click here. I said I would cover tuition fees, but tuition fees can disqualify them from other credits, so uh, uh, we'll leave that out. Click here. They're very easy to add. Click here and complete the declaration applied to your situation. Well, let's click there. Let's say here we paid rent. So I forgot what street I put, but let's just put another fictitious address. Occupied for 12 months, and the rent that he paid was somewhere in the tune of $22,500. No, it's not a private long-term care. There we go. Let's go back here for a moment. So we did consult that. That's great. We're not interested in that. All right, let's see what we came up with. We're going back to summary. Uh, there is no tax to pay. Great. Let's check the messages. Uh, Heads up, folks. Electronic submission service will start February 24th, 2020. You entered 0 as a percentage ownership. Click here to fix. Where did I do that? Hmm. Let's hope that works. Back to messages. I don't think I'm supposed to put anything in that percentage ownership. UFile might claim for the reduction for a dependent child born in 1999 or a dependent with. Okay, we'll see that. Here's the optimizations that UFile made. Um, who was the optimal person for the medical expenses? It was Daniel Longworth. Who was the optimal person for the charitable donations? There you go. Alright, and this tax return was calculated at this date and using version 2308. Great. Okay, next. Here's a summary, and see the income has been split evenly and only once. She gets to declare her own dividends. Um, he doesn't have a high income, so neither of them need disposal amount. It took the RSP deduction, but I guess you don't need to declare this here. You need to submit the form, and you can have it undeducted. And I have a small credit here. Let's see. Accept. Let's review the tax return now. Okay, the cover page. That's the executive summary. Tax return. Great, we have a loss and just some investment income, an RSP deduction, and some basic credits. This is the credit for the child. No childcare expenses were taken because they're not taxable. Okay. Let's continue to review. This is taxpayers. Now, if you were a prior client, you should have the data for 2018. Have a side-by-side comparison. Assembly instructions. If you're planning to mail your return, I would highly recommend to net file it if you're eligible. This is ultimately the condensed copy. If you were printing the return to be sent to the government, this is the condensed copy that should be sent to the government, and the actual return that we print here, the 8-page return, is actually only rendered in order for you to be able to consult it and make sure it's accurate. So here's the return. Here's my gross income. That's my net income, which is a loss. That's my interest income. $5,000 RSP deduction, which really you don't need. The basic credit is all he gets. And then there's no tax to pay. And this is your climate action incentive credit from Schedule 14. This is your RSP schedule. Canada Pension Plan Contributions Calculation, Schedule 8. And Schedule 14, the Climate Action Incentive. These are the amounts. The Ontario tax with the non-refundable tax credits. Ontario tax is 0 because you're in a loss situation. Homeowners property tax grant. We applied for it. And since you had a capital loss, you can carry back that loss 3 years if you had income in the prior 3 years. Cumulative net investment loss, and this is the cumulative net investment loss. This is your income statement, you identified your business and your income, cost of goods sold. Here, all your expenses, and here's your loss, which you shared 50-50 with your spouse. And we're coming to I believe the page where we calculate depreciation as well. Identified the name of your partner. Here's the depreciation. Class 8, 20%, 10, 14.1, and another 10. And your eligible capital property, motor vehicle expenses based on kilometers, this is a new form that we've added, and it's an in-house form. It does not have to be submitted to the government. However, it tells you how much each person benefit from the other's credits with respect to childcare, medical expenses, and donations. So that's called Report Tax Savings Reconciliation. Um, your worksheets, or investment income as well. That used to be called Schedule 4, but now it's just a worksheet. GST credit calculation. There you go. And the Ontario Trillium calculation as well. Seems to be a good credit. RSP schedule. Non-capital loss incurred in 2019. CCA carry forwards. So that was the beginning. And how much you'll be able to depreciate in 2020, providing you keep the asset and you don't dispose of it. Other carry forwards. That's pretty much his return. The son does not require return, so one is not rendered. And let's take a look at Danielle's. Yep. Cover page again. Side-by-side summary with the spouse. Tax summary for Miss Longworth. And as you can see, it generated an income statement for her as well. There you go. Assembly instructions should I desire to mail my return, but I'll wait until February 24th and net file it. Here's the condensed form that with the barcode that actually would be sent to the government should you decide to send it by mail. Highly recommended to just net file. I've been net filing my personal return now for almost forever. Alright, and here's my loss, my share of the loss. These are my dividends. They get grossed up automatically by UFile. You only need to put in the actual amount. There you are. Um, Identification of the spouse, because his income was lower than the threshold, so she's claiming the spousal amount. The RSP schedule. Let's just jump ahead. CPP. Let's just save this file so we don't lose any data. Save as. And we'll call it well, there you have the temp. Okay, great. There you go. CPP contributions, they have none because there's no income. Ontario tax and credits. So that's fine and dandy. And there's the loss that you can carry back 3 years or carry forward, I believe 20. And here's the income statement, done automatically. Split evenly between the two partners. Partners in a relationship, that is. Here are the donations, and they're being carried forward because if they're not carried forward, since they're not taxable, the credit would be wasted. So I believe they can carry forward the donations 5 years. And here's your total medical expenses. There you go. Their income has to be above a certain threshold, and then you can claim a portion of it as a refundable credit as well. Report on tax reconciliation, Canada Child Benefit, estimate for the child. That's a lot of money. Woohoo! Total entitlement, Ontario Child Benefit. So you got the federal, which is calculated up here, plus the Ontario Child Benefit, for a total of $8,226. That's a lot of money. There you go. This is a new credit as well, Canada Training Credit Limit. So if she was in school, she would get an extra $250 on her return. But that cuts down on the credit that you can claim on Schedule 6, which is the Canada Workers Credit, which is also generous. So in actual fact, being a student here, because she's not entitled to the um, uh, Canada Workers Benefit, would give her a little bit more money back. So if Danielle had gone to school, so let's put her as a student. Now, you actually do have to be a student in order to claim it. All right, so let's go ahead and put some tuition fees. Let's go back to the interview. Uh, Here, interview. Say um, tuition fees. There. Click next, and it should take me to tuition fees. Here you go. And let's go and say she went to the Ottawa Community College. And paid $2,500, and she was full-time for 12 months. Alright, let's see if that's going to make a difference for Danielle. Scroll down. Canada Training Tax Credit, which is new for this year. No, so what does it have to do? Have a total of $10,000 or more of income. Oops, I missed that. Of income. Self-employed income, employment insurance, and paternal benefits or provincial paternal insurance benefits, the taxable part of the scholarship income. Oh, what the heck? Let's give her a scholarship income. Go back and make it taxable. That's going to be a bit tricky. Interview. T4A is where it's usually reported. There. Okay. And I'm not sure I can't exempt it. Um, Let's see. Other information. Let's say it's a research grant and it's $20,000. Next. Let's check the return. There we go. Still not taxable. And let's take a look at that Canada training credit. Have a total of 10,000 or more income, including income from an office or employment, self-employment income, employment insurance, and parental benefits, or provincial parental insurance benefits, the taxable part of the scholarship income, and research grants, the tax-exempt part of earnings. So I guess because she's not taxable, doesn't qualify for this credit here. The eligible income here is in the red still. Well, it's unfortunate, but it's good to know that you can get that. Okay. And one thing that's bothering me is that at the start, important information, important changes. We said in Ontario, we have a new non-refundable low-income individual and families tax credit has been introduced. For more information, see line 77, low-income individuals and families tax credit on page 63 of the guide. Um, hmm. Let's take a look at her 479, her ON 479 to see if we missed that. There it is, lift. We didn't miss anything. Low income individuals for and tax families tax credit. So calculating a maximum allowable credit. It's a maximum of 850. And calculating credit for single individuals. Calculating credit for individuals with a spouse or common law partner. 850. 850. Enter the amount on line 62140 of ON 428. So we did get a credit. And if we go to ON 428 line 62140, here it is. So she doesn't pay any tax. And let's double check what her refunds are. Oh golly gee, look, Canada Workers Benefit. And Provincial Territorial Credit, $6,000. Ontario Childcare Access and Relief from Expenses Tax Credit. That's a generous amount, let me tell you. Well, after it's all said and done, what you need to do, and some people forget to do this, is at the time of this recording, it's still mid-February, but once NetFile is available, and it's after February 24th, you need to go here, resolve any errors, and click on the send button. Once you click on the send button and everything has been transmitted successfully, you should actually this is the filing status. Resolve any errors, go to federal submission, hit the submission button from here, and then you should get an acknowledgement report. The transmission date and time, confirmation number, and print. Print it to for um, um, for reference and proof that you actually sent the return. If you signed up for the CRA's electronic services, you won't get anything in the mail, but you will get an email, and you can go to a secure site where you can check your notice of assessment. And usually refunds these days are all by direct deposit. Thank you for viewing this video, and if you have any questions, comment below. I appreciate your support. Don't hesitate to like and subscribe. Thanks. Bye.